So where can you make the most money in year 2020 and beyond? Will it be in real estate property investing or will it be in currency exchange? Well, hold on a minute. Why not about thinking about combining the two? Check out this video on how you can make more money using the combined strategy of property and Forex. As the intro suggested, you can make a lot of money in property investing and real estate. You can also make some money in Forex trading as well. But I wanted to bring your attention to combining those strategies into a hybrid. So let's go into the details now of how you can make more money in the year 2020 and beyond. Okay, so let's now talk about property investing and Forex using this hybrid investment structure I talked about. If you do have any questions, make sure that you type your questions underneath this video so I can get back to you as soon as humanly possible. Now, I want to bring your attention, by the way, these are stolen, nicked, if whatever phrase you want to call it, graphs from these links. So I'm providing you the links so you can have a look at the articles yourself and indeed the websites that they came from. I felt that they were reputable and credible, so I wanted to use them. And what I was showing you here is a chart of the last 10 years of where the average house price in the UK has gone. And you can see there the average house price has indeed gone up quite a lot. We've seen quite a bit of a decline in the 2018, 2019, and we may see a bit of a plateau 2020, 21 as well. Who knows beyond that where it might go. On the other side of the pond, we have the US markets, and they've had a bit more of a linear growth rate in the States of their real estate property investment house prices. Now, for me, I would say both graphs, both US and the UK, are showing very, very similar. I think the spike in the UK was a bit more rapid than it was in the US, but nevertheless, we are seeing this linear kind of price house was going up. How long will that last? No one knows. But one thing I would say to you is that we are talking about two different countries and therefore may have a different kind of line being developed from the year 2020 and beyond. So I'm not saying don't invest in the UK or do invest in the UK. I'm not equally saying do not or do invest in the US. You need to make your own decisions. However, what I would bring to your attention is the 2009 versus 2019 house price. We can see an increase in the UK of 44% versus 35% in the US. Again, this is history. It's not the future. So make sure that you look at where you might want to invest your money in the future. But what it is saying is that on the average 10 years house prices have gone up. It's quite significantly. Will that linear graph be there in 2029? Who knows? I'm not saying it will. I'm not saying it won't either. But what I did want to bring your attention to, and this is from XE, by the website, and it talks about foreign exchange. And this is Forex traders that may be gambling or maybe buying one currency to sell in the future. And this graph is representing how many dollars you could get for the £1. And we can go back a long time to see that we could get nearly $1.75 to the pound. But there is a low now of $1.2 to the pound. What does that mean? Well, if you're in Forex trading, you will know the impact this might have on your bottom line. But what I wanted to share with you is if you had £100,000 and you converted that using the $1.61 to the pound, you would have converted yourself into $161,000. If you put that into a bank that yielded just 1% compound interest over a 10-year period, you are likely to have come out with $177,844. which is quite a lot of money when you think about it. Now, when you go to fast forward to 2019, that $177,000 needs to be converted back to pounds. which the exchange rate is 1.21, which is significantly different to the 1.61 you had in 2009, which basically means you've now converted it to £146,000, 978, which is a whopping 47% increase by not buying any real estate property at all, not having any tenants at all. Now you're almost thinking, what the heck is this guy doing? He's a property real estate tax advisor, and now he's telling me all about Forex and I should not be buying real estate? What a crazy, crazy guy. So what we're going to be talking now is, let's imagine that you were in the UK, you wanted to invest in the US in 2009. What's going to happen is you take your $160,000 there, we would convert it using the 161, which gets you 257,600. And ignoring prices, you know, of purchase fees, sales fees, etc. We're just going to, because like-for-like comparisons need to be made, and we haven't done that including purchase price fees and sales price fees, etc. So we're not going to do the same here either. But what we are going to assume is that we take this 257, but there's been a US increase of 35%, which basically means that the property house value of 257,600 is now increased now to 347,392. When we convert that back to a lesser currency exchange, which it was in 2019 of 1.21, your sterling that you're going to get back into the country is now 287,101, which is an increase of 127,100, an increase of percentage terms of 79%. That's right. What we are doing here is not just playing the real estate market in the US, but we're also using foreign exchange benefits as well. Now, please do make sure that you think about where there is a foreign exchange rate now, because it's unlikely you're going to be able to invest in terms of the UK using an exchange of 121 and making benefits. So it may be now time, if you've got investments in the US, in the UK as a US investor, maybe selling now is a great opportunity because the currency exchange is so good. However, it may now be an opportunity for people in the UK to start thinking about investing in the US, because you've got a holiday home, which we talked about in previous videos, but we've also got a better depreciation write-off allowance in the US, which you do not get in the UK. So there are so many benefits of owning real estate property investments in the US now going forwards. And indeed, if you currently own investments in the UK as a US citizen, well, now might be the time to sell them, especially when you've got the tax changes like GILTI that's going to be affecting you in the year 2020 anyway. So that's pretty much my analysis, and what I've done for you is giving you a summary chart. So what I've said all along is that we are seeing an increase in the UK property market, not going to doubt that. We've seen an investment increase in real estate investments for the US, no doubts about that. We've seen a currency gain if you're trading in Forex, but if you're combining the hybrid between property and Forex, you could make a 79% whopping benefit. Now, hindsight is one thing I appreciate, but what are the opportunities for you to combine the currency exchange versus buying into real estate of another country? There are risks that you need to think about. The laws will be different in the countries. You need to receipt the money back for your tax return, so that could be a little bit more complex. But guys, 79% far outweighs the benefits of the other property investment strategies that we've been saying already. So make sure you think about combining your investment strategies of property, real estate, and indeed Forex. If you want to know more about keeping your money safe and getting the best exchange rates, then I suggest that you look at a company called MoneyCorp. There are others out there, by the way, I do appreciate, but MoneyCorp does seem to be very reputable. You can buy currency, you can fix currency, so you can really make it work for your future investments. So hopefully that's been worthwhile watching this video. If you do have any questions, make sure you type your questions beneath this video and I will get back to you as soon as possible. But please do make 2020 your best investment structure yet, and to make the most money. By the way, you do need to be tax efficient as well. Thank you. My name is Misiewicz from Optimise Accountants.